Good morning, everyone. Alissa, Coram, and Ed Carson here with your market update on this Monday, reporting to you live from our newsroom. On today's show, we're going to be talking about a couple of breakouts. We have Adobe and Trade Desk entering buy zones today. Plus, we're previewing results out from Google parent Alphabet after the close. First, let's take a look at the major indexes. We are mixed today. The NASDAQ on the upside up about 0.5%, while the S&P 500 down about 0.1%, and the Dow down about 0.3%. But overall, the rallies still keep on keeping on, I guess, is the mantra.
It's looking pretty strong. This is actually more effectively bullish. We're in a bullish phase for investors as a practical state. In the last several days, we've cleared that little mini consolidation above the 50-day lines. And more importantly, there's a lot of leading stocks that have broken out. I mean, you know, in late December, early January, we're breaking out, but we really weren't seeing, there wasn't a whole lot of stocks to buy. I mean, you could play ETFs. I mean, IBD Leaderboard bought UPRO, which is this triple leveraged S&P 500 play, but it was hard to buy leading stocks. There wasn't much to buy, but now there are. So this is a tradable rally. Doesn't mean it's the beginning of this big 5-year run. We don't know. But right now, it is a tradable rally, so that's encouraging.
Right, always good to see leading stocks actually breaking out when we're in a new market uptrend. So speaking of, let's take a look at Adobe. Those shares up almost 3% today, clearing a handle here. The buy point is 250.78 within a double bottom pattern here. Volume not too heavy, but a nice breakout. What would you say are some of the things that stand out to you about Adobe today?
Well, I mean, obviously, you'd like to see the volume be a lot stronger. I mean, that's an issue. One issue with Adobe is that its relative strength line is coming up. It's right around a new high. I mean, the RS line on one side, it never really fell that much, but it really didn't have a big uptrend even leading up to it. So, you know, this has been a very strong stock. You know, obviously, would like to see that volume pick up. It could be that the traditional double bottom buy point above the middle of that W will end up being the more, you know, truer, more important resistance point. But you know, it's a nice sign to see a breakout like that.
That's right, and the good thing about when a stock forms these handles is oftentimes it's lower than another buy point, like the middle of the middle peak of the double bottom here. So potentially an earlier chance to, you know, start a position.
Absolutely.
And let's also take a look at Trade Desk breaking out today, clearing a double bottom entry here. That stock up over 4%. Now, volume is heavy today for Trade Desk in the commercial services advertising industry group, with a buy point at 149.10. And it looks like that RS line is trying to sneak into new high ground, and when that happens, before a stock hits a new all-time price high, that's pretty bullish.
Yeah, I mean, it's saying that this is leading the market. It's going out there. It's just a really positive sign. Yeah, you can see that this one, you know, it is a traditional double bottom base going through there. This is an IBD 50 stock. You know, we've been watching it, so this is definitely one to be paying attention to. You can definitely see the RS line has been moving higher in the last several weeks. Obviously, moving really higher. But I mean, you know, obviously the market rebounded, but Trade Desk was rebounding a lot stronger, and that's always a positive sign.
Yeah, it is. And we have earnings coming up later this month in a couple more weeks. But last quarter, we did see accelerating growth on the top and bottom line. So always good to see fundamentals that are looking as good as the technical action.
Absolutely.
And last but not least, speaking of fundamentals, will we see a good report from Google parent Alphabet after the close? That stock technically hasn't been looking too well, some resistance around that 200-day line. Analysts are expecting Alphabet to report earnings growth of 12% with revenue up about 20%. So we will have to see when this report comes in after the close. But what's your take on the technical picture here for Alphabet?
It's a little complicated. The 200-day line, it's actually, the 200-day line has been a big issue for a lot of the FANG stocks right now. Netflix was the only one at Friday's close that was above the 200-day, and just barely. There is sort of a resistance area that you can sort of see that little point a few months ago, just above the 200-day line. That could be an early entry, an aggressive entry point. You'd really have to, it is well off the high, so there would be a lot of upside resistance, and you'd have to be aware of that.
Right.
So it would probably be the upper channel would be another situation. Another situation is definitely be cautious about buying ahead of earnings.
Yes.
I mean, it's always the case, but Google doesn't really give any guidance. So it has a tendency, it can actually miss in a way that some of these others, they
maybe
don't.
miss, or but the outlook can outshine.
They can outshine.
A miss.
And so this is one, unless you're doing options, it's really scary. You just don't know. I mean, also, it's in a slower growth phase. It's not growing like it used to.
Right.
This is maybe not the wow, gigantic growth. That could just mean slower growth, but also mean it's still a strong stock.
Yeah, that's right. And another strategy in addition to options would be looking at that gap up. That's another strategy. Maybe more advanced traders would want to look at, but there's a couple of names that we've seen momentum continue after a post-earnings gap up.
ServiceNow was one that comes to mind, yeah.
All right, everyone. Thanks for joining us. And guess what? You can get to see more of us today. We are testing out a new show at the close, so make sure you are tuning back here at 4 Eastern, 1 Pacific for more analysis at the end of the day. Can't wait. And in the meantime, make sure you're heading to investors.com for all the latest market news and analysis, and check us out across social media. We are on YouTube, Facebook, Instagram, and Twitter. So make sure you're following and subscribing for all the latest. If you're not following yet, please do so, because that's how you'll get alerts and notifications whenever we go live, just like we will today at the close. Thanks for joining us, and we'll see you back here later today.